Wall Street snaps a 9-week winning streak even as stocks close higher on Friday. Jobs data shows that U.S. economy added a higher than expected 2.16 lakh jobs in December, causing yields to spike over 4.1%. Stocks in the Asia-Pacific trade mixed, while the GIFT Nifty is indicating a positive start for the Indian market. Crude prices trade flat this morning but surged nearly 2% on Friday, taking Brent crude to around $79 a barrel as Antony Blinken visits West Asia. Government's advance estimates projects FY24 GDP growth rate at 7.3%. This is well above the CNBC TV18 poll, and the RBI's estimate of 7% expects nominal GDP at 296 lakh crore rupees, which is below the budgeted estimate of 301 lakh crore rupees. Strong domestic demand fuels a strong performance from Tata Steel in Q3. From the consumer space, Titan's December sales grew 23% YOY, but growth lags that of competitors. Marico's revenue declines in two single digits. Good morning in the Mumbai News Center. I'm Sonal Bhutra and you're watching Power Breakfast. Those are the top headlines that we are tracking. The global markets, they continue to be in focus on a number of developments. But first up, let's take a look at what the Asian markets are doing. It was a strong handover that we got from Wall Street, but Asian markets, they are quite mixed right now. We do have a slew of economic data which is expected. There is investors are awaiting Bank of Korea meet outcome, and that is something that they are taking in stride as well. Hang Seng is down around 38 points, while Taiwanese index is higher by 130 points as we speak. We do have macro data expected in the US this week as well. The CPI data on Thursday, the producer price index on Friday. But overall, it's a mixed picture in the Asian market. Shanghai is down 0.6%, and the GIFT Nifty, that will come up for you on the screen, and that one is indicating an implied open which could be actually in the red. It has fallen from the highs of the day, so 23 points lower is what the GIFT Nifty is implying right now, considering the mixed cues that we have from the Asian markets. Let's talk about the US markets now. Wall Street ended marginally higher on Friday following a stronger than expected jobs report. Dow Jones gained over 25 points, while the S&P 500 and Nasdaq just added about 0.1%. All three major indices notched their first weekly decline after 9 straight weeks of gains. While S&P 500 dropped 1.52%, Dow lost 0.59%. Tech-heavy Nasdaq had the biggest decline of 3.25%. Treasury yields rose post the jobs report, with the 10-year U.S. Treasury yields touching a high of 4.1%. The U.S. economy added many more jobs than anticipated in December, with non-farm payrolls growing by 216,000. The unemployment rate remained steady at 3.7%. CNBC's Rick Santelli gets us all the highlights from the December's jobs report.
Non-farm payrolls a bit stronger than expected at 216,000. 216,000. That would be the best since September, when it was 262,000. I don't see all the revisions yet specifically, but the 2-month revision in a combined form is minus 71,000. Traders find these revisions very disheartening. Now, if you look at unemployment rate, it remained at 3.7. We got no uptick in the unemployment rate. If we look at average hourly earnings, up 0.4%. We're expecting it to be a little lighter in the rearview mirror. It was up 0.4. If you look at October, it was only up 0.2. So it did pop, and it seems to be holding that pop. If you look at year over year, also warmer than expected, 4.1. 4.1 year over year. That's the best since 4.2. Also, that was from September. Now, if you look at average hourly work week, 34.3, 34.4 have been the numbers. Hasn't had a lot of movement. Labor force participation reverses.
Okay, it's time to listen into some important opinion coming in from Roger Ferguson, the former Federal Reserve Vice Chairman, talking about the December jobs print and its impact on Fed's decision to have rate cuts this year.
I think the overall story the Fed will take from this is they have been right to push back on expectations of a quick pivot towards cutting rates. You know, the rate cut story of, starting in March and maybe 6 this year, I think this sort of knocks the legs out from that from the standpoint of the Fed. So I think you'll continue to hear some pushback there. And I think that's probably right. they'd also look at that 4.1 number and say, okay, things are still moving roughly in the right direction, but not moving as quickly as maybe some had thought.
Okay, all right, that's the global market action, but how will these overnight cues impact our own markets? We have our research team joining in with what the trade setup looks like, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning to all of you. Reema, let me come across to you first up. What is the market setup that we are looking at today?
Well, flat to begin with, as you pointed out, in the GIFT Nifty, in fact, slightly lower. But the big cue this week will be the earnings, which start on Thursday and Friday. On Thursday, Infi and TCS report numbers. And on Friday, you've got Wipro, HCL Tech reporting numbers. And add to that, HDFC Life. The other cues that we're working with for the day include US markets, where on Friday they ended higher, but for the week, they snapped that winning streak and closed mildly lower. But broadly, you would say the US markets were consolidating last week. The Japanese markets have a holiday today, and you spoke about the rest of Asia. Brent crude prices have inched up compared to the levels that they were last week, which was closer to $77 per barrel. But now we're looking at $78.50 per barrel. So Middle East tensions continue to remain. The GDP estimate, the first advanced GDP estimate for FY24 has also come in better than what the economists were earlier anticipating at 7.3%. This is the last GDP print which will be released before the union budget is presented. We've got a lot of business updates that the markets will react. In the consumer space, you've got Titan, GCPL, Barrico. In the banking pack, Bank of Baroda, Union Bank. And in terms of flows, you've got the DII's net selling nearly 3,500 crore in the cash market, while the FI's net bought 1,700 crore in the cash market. Back to you.
Okay, all right. So that is the market setup today. But Hurmaz, Reema did speak about some of the updates and other stocks and news. Tell us more about that.
I'll elaborate more on them, and starting off with Titan and the jewelry division. The core business of Titan grew at 23% year on year in the December quarter, and the 2-year CAGR now of this is at 16.8%, and that is lower compared to 25% that Kalyan Jewellers has, as we highlighted on Friday. Godrej Consumer Products is expecting to deliver mid-single digit volume growth in the quarter, and the Indonesia business saw double-digit volume growth during the quarter as well. Marico saw consolidated revenue decline in the low single digits during the quarter. The domestic volume growth was in the low single digits as well, and the value-added hair oil business saw low single digit value growth during the quarter. Adani Wilmar standalone sales were down 15%, volumes were up 6%, and they said that they benefited from the elevated demand during the wedding season and the festive season. Nykaa released their business updates as well, where they said that the beauty and personal care GMV growth was seen in the mid-20s, and on a consolidated level, the net sales value may grow in the mid-20s, while the revenues are expected to grow in the low 20% range. Also reacting to their Q3 updates today will be Bank of Baroda, Union Bank of India and Tata Steel. Bajaj Auto, that will be the stock to watch out for today. The board meeting takes place today for a proposed buyback of shares. Federal Bank, where the RBI has asked the lender to submit 2 names for its MD and CEO, as the incumbent MD and CEO Shyam Srinivasan's tenure ends on the 22nd of September. And lastly, Shyam Metallics, which has raised 1,385 crores via QIP. The issue price has been fixed at 576 rupees a share, and Reliance Commercial Finance and Society General are some of them who have been allotted shares. Back to you.
Okay, all right. So that's a long list of stocks that will be on our radar today, but a lot of cues from the F&O space as well. Manglam is joining us now. Hey, Manglam.
Good morning. So what was interesting on Friday's trading session was that we're finding resistance at the 66% retracement levels from the fall that we saw from 21,834 to around 21,500 itself. Friday's high was close to around 21,749. Important to note that the Nifty Bank underperformed a little bit. So if you look at both the indices, the Nifty Bank ended mildly in the red, even as the Nifty ended mildly in the green. And that was reflected in the way the FIIs behaved in index futures as well. The net purchase in index futures was close to around 485 crores. The purchase in Nifty was 546 crores, and they sold around 61 crore worth in Nifty Bank itself. The longs in FIIs in index futures is still 67% itself. What is, however, positive is that the India VIX has been falling, and that's from levels of close to around 15. It's come down to around levels of 12.63, telling you that the market is not very worried, and this volatility is in its stride itself. On the way up, however, there is a lot of congestion expected, and that's witnessed in the kind of call writing that we've seen. 3.3 lakh calls written versus just about 0.68 lakh puts written. 5 calls every put have been written. 21,800 call extremely active, 21,700 call extremely active. We've seen some writing at the 21,700 and 21,500 puts as well. What does this mean? Congestion at levels upwards of 21,750 all the way up to a previous high of 21,834, support at 21,500 to 21,600. 11 stocks are still in F&O ban, so that's a bit of a worry. And as we pointed out on Friday, Piramal Enterprises' likelihood of entering F&O ban, that's happened, and Hindustan Copper is come out of F&O ban.
Okay, all right. So that is our Power Prep segment. Thank you guys for joining us and telling us what to expect from our trading day today. With that, we'll slip into a break. Up next, the NSO has announced its first advance estimate of this year's GDP. We'll get you more on the updates on the other side, so stay tuned for that. Welcome back. You're still tuned into Power Breakfast on CNBC TV 18. Well, the National Statistics Organization has released its first advanced forecast for India's GDP growth in FY24, expecting the economy to grow at 7.3%, which is higher than the RBI's latest 7% forecast and also higher than CNBC TV 18's estimates of 6.8% growth. Lata is here to tell us more on that. Lata.
Well, the first takeaway about the numbers is that it's an outstanding number. At 7.3, not just above the Reserve Bank number, not just above the CNBC TV 18 poll number, but if you looked at the Reserve Bank number in April 2023, it was only 6.5%, and at that time, Reserve Bank was considered too optimistic. On the street, the numbers were 6%. So look at the growth at 7.3 from an year ago estimate of just 6%. Now, what worked for India, of course, the headline GDP was the best number, but within that, what worked most was industry. Industry is growing at 7.9, and it is helped largely by mining and electricity, which are growing by 8.1 and 8.3%. Construction is superb at 10.7. Clearly, government capex doing very well, and financial sector has done reasonably well. So services 7.7, within that financial services 8.9. And like I told you, government capex very good. So the overall capital formation is 10.3%, which is superb. But what did not work? What did not work, unfortunately, are the employment-heavy sectors. First is agriculture and allied services like forestry, horticulture. That's only 1.8%. And remember, that employs more than half of India. Within services, trade, hotels, transport, communication is a large employment-generating sector. So, all our Udupi hotels and ST buses, that's only 6.3, considering that the overall GDP is 7.3. That's not growing too well. And therefore, jobs perhaps is a concern. And that is very clearly reflected if you looked at GDP from the expenditure angle. Private final consumption expenditure has grown only by 4.4%, government consumption 4.1%, which means the big 7.3% growth is probably not trickling down. That would be the worry. Now, the result has been that you will find a lot of economists pushing their forecasts up. But we have to accept that it's a great India shining story. We would wish it should trickle down a little bit more.
Okay, all right. We take that point. Thank you so much, Lata, for joining us with that FY24 GDP forecast given by NSO. But with that, we'll move on and talk about what happened in the Tamil Nadu Global Investors Meet. On the sidelines, my colleague Jude Sanet spoke to Arvind Subramanian, who's the former chief economic advisor, about the government's fiscal deficit outlook and India's potential to attract investments, leaving China behind. Let's listen in to excerpts from that conversation.
I think that the most important thing is to have a medium-term plan to get the deficit and debt down to reasonable levels.
Right. There's also been a lot of talk about how India must invest more in human capital and add value really, as opposed to merely looking at core manufacturing. In fact, both Raghuram Rajan and Rohit Lamba write about that in their recent book as well. Do you feel that there's not enough value that India is deriving from wanting to be a manufacturing superpower, from wanting to compete with the likes of China? Do you think there's a lacuna that needs to be filled?
Yeah, absolutely. And in fact, Tamil Nadu is filling that, actually. That's what's very encouraging and surprising about Tamil Nadu. That, you see, there's a big opportunity here for attracting the investment that's leaving China. And a lot of investment is leaving China. So this is the moment for India to create the conditions to attract that investment. And that's exactly what Tamil Nadu is doing. And, it includes, creating a good investor environment. It also has increasingly begun to translate into state governments willing to entertain plants that will become big in scale. in a way that never used to happen before. 20,000, 30,000 people factories never used to happen before. That's happening, and these are the ways in which you can attract investment.
China plus one, everyone's talking about it right now. Do you feel we're doing enough, or do you feel that there's so much more potential?
I think as a country as a whole, we're not doing enough because a lot of this is going to Vietnam and Indonesia and other countries, and we're not attracting enough of that. But I think slowly, with the entry of Apple, with the entry of many of these Vietnamese and even Korean players into Tamil Nadu, that's a model that other states should also emulate.
Okay, all right. We'll do one thing with that. We'll slip into another break. When we come back, we'll talk all about the cues from the commodity market. There's a lot that's happening there. Welcome back. You're still tuned into Power Breakfast. Well, let's go across to Manisha Gupta. She's joining us with all the updates from the commodity markets. Hi, Manisha. Good morning. A lot happening in the crude oil space.
Well, it is, yes. The prices have gained by 2% in the first week of 2024. This week has started on a flatter note right now because the markets are dealing with contradicting fundamentals. On one side, you have Saudi Arabia cutting the official price to Asia to the lowest in 27 months. And on the other side, you still have the Israel-Hamas war, the Red Sea concerns, the Syria output holds, all of that supporting the markets. The street will, of course, watch out for the OPEC and allies meeting, but that's only on the 1st of Feb. And the street also is reacting to the December non-farm payroll data, which has come in higher at 216,000 versus 170,000 of an expectation, really putting the interest rate cuts beyond the first quarter of this year, and that really seems to be weighing on. The markets will also watch out for various data that is coming in into this week itself. We have inflation numbers from China, India, US, UK, all of that slated for this week itself, and that would give you further direction.
Okay, all right. So those are all the commodity cues and a lot of macro cues that will define commodity moves going forward. Thank you, Manisha, for joining us. Now let's bring you some updates on the Red Sea conflict. Houthi rebels continue to attack commercial ships in the Red Sea as Israel-Hamas conflict deepens. Shipping giant Maersk has already said that it will divert all vessels away from the Red Sea for the foreseeable future, warning customers of disruptions. Meanwhile, India's Navy said its commandos have rescued all crew members from a Liberian-flagged merchant vessel after its attempted hijack in the Arabian Sea, and that it had not found any pirates on board. Okay, all right. With that, we'll do one thing. We'll take your leave on this edition of Power Breakfast, but do stay tuned. Bazaar Morning Call comes up next with all the market action.